Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, August 27, 2014, and Labor Day holiday has taken hold. Today is the lightest volume day of the year, only to be surpassed by tomorrow, which will be the lightest volume day of the year. So there's not much new. It was a flat day in the S&P. Flat day in the markets all around. You had a mixed bag in the stock market for the most part. Stocks up and down. There was just a mixed bag. Like if you look at the screen, for example, with all bunch of my stocks on it, it was half and half. But for the most part, I would expect a upside float for tomorrow, Friday, maybe even Tuesday, and then we'll get back to business once the Labor Day holiday is passed and everybody gets back in the swing of things. So in earnest, second week in September, towards the latter part of the first week, you should see the volume and volatility pick up a little bit. Other than that, there's really nothing new in the S&P. This is the SPY, of course. Here's a 60-minute chart just for the heck of it. You know, you actually have some bullish consolidation pattern working here. So, you know, you've taken this stair-step approach higher, and there's nothing that says you can't do it one more time. And as far as the S&P goes, you could see the S&P as high as 2010, 2012, maybe even slightly higher tomorrow to Friday or Tuesday. And then we should top out somewhere in that range, but we'll take it one day at a time and we'll go from there. I'm going to move on and let's flip over to the gold chart. Gold was flat. GLD was down 3 cents. Nothing's changed. This is the 60-minute. Let's flip over to the daily. Nothing's changed. It's the same routine. You're chopping around, not buying anything like this before the Labor Day holiday weekend. And if I just run over to oil real quick, same routine. USO was down a penny. You're making a sideways bearish consolidation pattern. And my favorite chart, as you guys know, is the weekly chart of USO. And my weekly number on USO is $34. And it could even be lower depending on how long. If we consolidate sideways for like 5 or 6 weeks, then everything changes. But if it puts in another week, then you would see 34 as the low, and I think that would be a good pickup. But we'll play that one day at a time as well. I'm going to make this real brief tonight, folks, because nothing is new. I just want to cover a couple of more things. I'm going to cover the VIX, which is VIX ticked up slightly today, but you're going to look between now and next Tuesday, maybe even Wednesday, you're going to look for a VIX down in this 10.5, 1075 range. If you get a 10.5 print, 1075 in the VIX, you can go ahead and buy the VIX long, buy some calls in the VIX. You can buy VXX. I don't love that ETF, but nevertheless, you can utilize it for a short-term play on the VIX, because once the volatility picks up in a couple of weeks, you're going to see the VIX back up into the 17 area rapidly, and then higher from there. So that would be there's a lot of upside in the VIX if you just wait. Give it the patience it deserves, and wait for like another $1 lower on the VIX, which is right now at 1178. Wait for $1 lower on the downside, and then you can start collecting some calls or buying VXX, and you should reap the rewards from there through the month of September into October. Take that again, one step at a time, but that's probably a good freebie for you. I'm going to leave it there, folks. There's nothing new out here. Nothing's changed. Nothing's going to change tomorrow. Nothing's going to change Friday. I'll do a video update as needed, but for now, there's no reason to waste anybody's time. That's a snapshot of the markets, and I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis.